Hey everyone, welcome back to Corporate Decoder, the place where we decode what companies are really hiding in their shareholder reports. Today we're diving into Charter Communications' latest filing to see if their operations are as fast as their internet speeds. This report talks about a big deal they made with some major banks involving a lot of money. Let's break down what this actually means for the company and its investors. Charter Communications is a giant in the telecommunications industry, often recognized for its Spectrum brand. They provide cable television, internet, and phone services to millions of homes and businesses across the United States. Think of them as one of the major players connecting us to the digital world. This type of report, the 8K, is like a special bulletin issued when significant events happen that shareholders should know about immediately. It's not a regular update like a quarterly earnings report, but rather for urgent news. The key date here is August 18, 2025. This is when the main event we're discussing today took place. So what happened on that August day? Well, Charter subsidiaries entered into something called an underwriting agreement. This is basically a contract with investment banks who act as intermediaries, often called underwriters, to help sell new securities like bonds or stocks to the public. In plain English, Charter is borrowing a massive amount of money. We're talking about $1,250,000,000 to be precise. These are called senior secured notes, which means this debt is prioritized over other debts, and it specifically matures in the year 25. The interest rate, well, it's 5.850. And that's not all, they're also borrowing another $750 million. This batch of debt is due much later in 2055 and carries a higher interest rate of 6.70%. So they're taking on a significant amount of debt for the long haul. These agreements involve big names in finance like Citigroup, Global Markets Inc. JP, Morgan Securities LLC, and Morgan Stanley & Co. LLC, who are acting as the main coordinators for selling these notes. Why would Charter borrow so much money? It's usually to fund operations expansion or pay off existing debts. In this case, it's likely a strategic move to secure a large amount of capital at specific interest rates, potentially for future growth projects, or to refinance older debts that might have had higher costs. It shows they're actively managing their financial structure and perhaps planning for significant investments. You'll also see a mention of a consent from Deloitte and Torelli. This is a common thing in financial filings where an independent auditor gives permission to include their earlier reports in the new filing. It essentially confirms their previous stamp of approval on certain financial information. This section is like the index for all the extra documents attached. It lists things like the underwriting agreement itself and that auditor's consent. Here's where they list that consent again. But this is the actual contract for borrowing the money. This is the paperwork that lays out all the terms and conditions for those massive loans we talked about. And this last one refers to the formatting of the report itself, making it searchable and easier for computers to read. The signatures at the end are from Kevin D. Howard, who holds a very important role as Executive Vice President, Chief Accounting Officer, and Controller. His signature on behalf of Charter Communications Inc., CCO Holdings Capital Corp. signifies that these entities are officially acknowledging and filing this report. Charter is making a significant move to raise capital by issuing a substantial amount of debt. This is a common strategy, but it's important to look at the details. They're borrowing over $2 billion in total, divided into notes maturing in 2035 and 2055. The fact that they're securing funding for such long periods suggests a long-term growth strategy. The interest rate's 5.850, the interest rate's 5.850, the interest rate's 5.850, the interest rate's 5.850, and be welcome to, while these are secured notes, meaning they are backed by assets. If Charter were to struggle, it could directly impact those assets. The market conditions at the time of this filing would heavily influence these rates. If they're locking in these rates now, it means they believe current rates are favourable or they anticipate rates to rise significantly in the future. This move itself isn't necessarily good or bad, it's a tool for financial management. What we don't see explicitly in this particular filing are the immediate impacts on their financials, like changes in revenue or profit. It's more about their financing structure. However, taking on more debt increases their financial leverage, which can amplify returns if their investments pay off, but also magnify losses if they don't. It's a classic example of managing risk and reward. For investors, it means Charter is expanding its obligations. It's crucial to watch how they deploy this capital. Are these funds going towards innovative new services, expanding network reach, or are they simply refinancing old debts? The success of these borrowings will depend entirely on the company's execution and the broader economic landscape. The risks here primarily lie in their ability to generate enough cash flow to service this new debt and the potential for interest rate fluctuations if they had chosen variable rate debt, which thankfully they haven't here. In conclusion, Charter is demonstrating aggressive financial management, securing significant funding for what is likely long-term strategic goals. While the filing doesn't give us a full financial picture, it highlights their commitment to growth and their confidence in future revenue streams to meet these new obligations. It's a bold move and one that will require careful observation of their subsequent performance. What do you think about Charter's borrowing strategy? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate insights. Don't forget to join our Discord community for more in-depth discussions linked in the description. Thanks for watching and we'll see you next time on Corporate Decoder.